Hey, what's up, my friend? So in today's video, I'm going to share with you MACD indicator trading secrets. Okay, these are the stuff that, I've not seen anyone share on the internet before. Okay, so you're going to be in for a treat. And no, I'm not going to talk about, how the MACD line cross up, you buy, or it cross down, you sell. Nothing of that sort. In fact, what you'll learn, right, is number one, how to use the MACD indicator to identify momentum reversal and even predict market turning points. Wow. Number two, how to use the MACD indicator to help you increase, right, your winning rate. And finally, how you can use the MACD indicator, specifically the MACD histogram, right, to actually identify explosive breakout trades about to occur. Sounds good, right? You done it? Okay, so let's begin. So first thing first, right, if you know, right, I like to always, talk about the indicator itself before talking about how to use it, because if you do not understand how the numbers, the lines are derived from the indicator, it won't make much sense later on. So this is why we always go back to fundamentals. What is a MACD? So the MACD indicator has three parts to it. Right? Let me explain to you what they are. Number one is what we call the MACD line. This line is derived, right, by taking the 12-day moving average. The founder, Gerald Appel, he used the exponential moving average, right? The 12-day exponential moving average minus the 26-day exponential moving average. This is where you get the MACD line based on this calculation. The signal line is simply the 9-day EMA of the MACD line. So 9-day EMA of this MACD line. And finally, the MACD histogram is where you just take the MACD line minus the signal line. So if the MACD line, let's call it X, signal line, call it Y. So this is the, let's call this P, right? The MACD histogram is going to be P. Okay, so these are the math behind it. And if it sounds confusing, don't worry, because I'm going to illustrate it with the charts right now, so everything will be crystal clear. So over here, you can see that this is the MACD indicator. Okay, so I'm going to just walk you through what they are. The orange line here is the signal line. The blue line over here is the MACD line. And this red thing you see and this blue greenish thing that you see, it's called the MACD histogram. So let's understand how all this, indicator goes up and down. If you recall, the MACD line, what's the formula? Well, it's just the 12-day EMA minus the 26-day EMA. So if you want to see, just pull out the indicator. I've got the 12-day EMA and the 26-day EMA over here, which is shown by this red line, 12 EMA, and this blue line is the 26-day EMA. So right now, the value of this, right, I can tell you it's about this this blue line is the MACD line. The value right now is about minus 2.6. All right, let me just redo this. The MACD line value right now is about minus 2.6. How did I get that? Very simple. If you just take the red line over here, find out what is this value, the latest value, okay? This value minus this value, the blue one, the latest value. This, right, let's call this X. X minus this one, let's call it Y. It's going to give you negative 2.6. Basically, the difference between this red line and blue line gives you negative 2.6, which is the MACD line that you see over here, this blue line. Okay? That's how we get the MACD line. What about the signal line? Well, signal line is quite straightforward, right? Recall, the signal line is simply the 9-day EMA of the MACD line. So to put it simply, right, it's just simply the average of the 9 values of the MACD line. So let's say, for example, the MACD line has a value of, which is this blue line. It has a historical value of, let's say, 5, 10, 20, 13, 14, 15, how many numbers? 1, 2, 3, 4, 5, 6. All right, call it another one, 7, 8. 1, 2, 3, 4, 5, 6, 7, 8. One more number. Okay, so right now we got 10 numbers, right? 5, 10, 20, 13, 14, 15, 7, 8, and 10. So what you'll do is you calculate the, let's imagine that all these numbers is actually this MACD line over here, the blue line. Okay, you add all of this up and you divide by 9. Divide by 9, right? And the answer, right, let's say the answer is X, right, will be your value of your signal line, because the signal line is just simply the 9-period moving average of your MACD line. Simple as it is, right? So that's how you get the orange line. And finally, how do you get the histogram? Okay, so the histogram is, if you recall again, let's go back to the slide, right? If you recall, the histogram is simply the MACD line minus the signal line. So again, you just take this MACD line. Okay, MACD line is the blue one over here. The blue line minus the orange line, right, will give you the histogram value. Okay, so all you need to do is to find out what is the value of this blue line over here, MACD line, minus the value of this orange line over here, and then what you'll get is the value of this histogram over here. Simple. And one thing to share with you is the histogram, right? What it does is that it measures momentum in the market. So you can see that as the space between the MACD line and the signal line over here, the space here is getting wider. Notice it, the space between the two lines is getting wider, is where your histogram starts to slope up. Okay? When the space between the MACD and histogram, between the MACD and the signal line starts to tighten, this is where you notice the histogram starts to slope down, right? Notice the space between here getting tighter and tighter, right? Between the two lines, tighter and tighter over here. So that's pretty much, right, all there is to the MACD indicator. Now you've learned, how the numbers are derived, right? You can actually use the indicator for different purposes as what I'm going to share with you right now. Okay, so now basics is covered. Let's move on. So generally, right, the MACD histogram, it's a trend following indicator and a momentum indicator. It can measure momentum, right, using the histogram. Okay, so first thing first, let's talk about how you actually, measure momentum and identify, reversal in the markets. So just to share with you briefly, right, let's say whenever you're trading support resistance, right, market is, in a range, okay, and you know that, you want to sell at resistance. And I'm not sure if you've heard of me say before, but whenever the price is at resistance, right, it doesn't mean you go short immediately. Instead, you want to see how the price approaches resistance. For me personally, I like to see a very strong, bold, and clean move coming into resistance. I like to see strong momentum coming into resistance, right? Where you see large bodied candles. Why is that? The reason is simple, right? When you get a strong move up higher, right, the reversal can be just as swift, right, quickly towards the downside. Okay? What you don't want to see is that, for example, this is the range, right? Market comes up, then it slowly chop its way up, right? Hover around resistance. This type of price action, I don't want to short the resistance, right? Because it shows you that there is sign of strength, right? Market making a series of higher highs and higher lows. These are the type of setups that I don't want to short resistance. I want to see strong, bold, and clean move, right, coming into resistance. So now the question is, how do you define this strong momentum move? This is where the MACD, right, comes into play. So number one, you want to move into market structure like, support, resistance, trend line, etc. Number two, you want a MACD histogram to show you strong momentum, right? Show you that there is an imbalance of buying or selling pressure. And then number three, you can just look for a price rejection, right, as an entry trigger. So let me explain with you, right, with the charts, right, obviously. If not, it's quite hard to visualize what I'm saying. Okay, so first thing first, let's have a look at the pound New Zealand. So you can see over here, now we don't need this 12 and 26, we remove it, right? You can see that over here, this is what I'm talking about. Note this. Over here is an area of support, right? You have a market coming into this area of support. How do I know it's a strong momentum move? Pay attention to the MACD histogram, right? When you see the MACD histogram showing a strong bearish momentum, right, where the histogram, the bar is getting larger and larger, it's telling you that there is strong momentum in this market. And whenever you see a strong momentum coming to support, it's where you want to fade the move. It's where you want to go counter against the dominant move lower. Right? This might sound counterintuitive, right? But the market, right, is more likely than not to reverse higher after making such a strong decline. All right, but there's no guarantee. So this is where you can use, basic candlestick patterns like, hammer, bullish engulfing, or, price rejection patterns, right, to so-called confirm that the market is about to reverse higher. And in this case, you got somewhat of a bullish reversal pattern, right, signaling that the market could possibly head higher from here. Okay, so this is what you want to see, right? A move into support, strong bearish momentum, right? You don't want to see weak bearish momentum. You want to see strong bearish momentum, telling you that there is an imbalance of selling pressure. All right, and this tells you that whenever there is a strong move lower, the market could just as swiftly reverse back towards the upside. So this MACD histogram, it's a sign to tell you, right, that there is a strong momentum move lower. Let's look at another example. Okay, pound yen. So again, right, over here, market coming into an area of resistance. Right, this resistance that I've drawn over here. Notice, right, strong bullish momentum, right? Looking at the MACD histogram is getting higher and higher over here. Strong bullish momentum. This is what you want, right? A strong momentum into market structure. And then you can use a tool like, again, candlestick patterns, bearish engulfing, shooting star to time your entry. In this case, you got this one over here, okay? And then the market hover a while at this level before it came down lower. But the key takeaway again is market structure with strong bullish momentum, right? Before you look for a short setup. Let's have a look at one more example to nail home this point. So again, this one, let's see. Okay, this one over here, notice, right? Market structure, resistance, strong bullish momentum coming in, right? So if you get let's say a bearish reversal candlestick pattern, this is a type of move, right, that you want to be shorting because there is strong momentum coming into a level. So you can see that over here, right, you did get somewhat of a price rejection, right, before the market consolidate and then it breaks out higher. So you might get stopped out, or it's a small win depending how you manage the trade. But I hope you understand this concept that I'm trying to bring across, right? So let's move